Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we mostly will talk on the Australian dollar, but first we will take a look at the Canadian dollar and try to understand what has happened yesterday. Well, the result of this setup that we have discussed brings us to the same conclusion as we talked every time when we are trying to take the position on the market, and this just confirms our major idea that we are following like the rule that we should take any position with having on the back very strong support area. This has saved previously a lot of money for us, and this has happened again last sessions, now yesterday's trade on the Canadian. Because take a look, initially we have taken a position and the strong support area is the confluence support and oversold on the daily chart, and on Monday, as you can see, market has shown very nice upward action. So the bread and butter trade has started very well, but as we now understand that this mostly was not even probably the starting of the bread and butter or something of that sort, that was just a reaction on the market of the strong support area. And as soon as market has abandoned the oversold condition, it has returned right back down. So we're not talking right now on the reasons why this has happened. We're taking a look just on the pure technical setup. We know that this is the data release in the United States on the price, the home sales. So, but here the tactics that we are following every time again has led us to save our money, because yesterday we have moved our stops to the break-even where we started this discussion on the Canadian dollar. That's why, as we have become wrong, despite this moment, we was able to abandon this trade, leave this trade with no loss. That's the great advantage and major, very important tool and the rule that we should follow in future as well, is taking the position only on the strong support area. Because if even you are wrong later, the first reaction on the market will test this area, will be probably in your favor. Sometimes it happens that market breaks the strong areas with no respect, but speaking from the probability point of view, this is relatively rare issue. In the most cases, market shows the reaction as it has happened on Monday. In particular, this reaction lets you to protect your position with a break-even stop. And if you will become wrong later, this will let you to exit from this trade to close your position with no loss on the break-even stop order. That's why, guys, we every time call you to take the position on the strong confluence. Speaking on our later entry on the intraday charts here, so it hasn't happened because the technical market just has passed through the all support areas right back down with no respect and no stop, so we have no even chance to take the position here because this was sort of a fast drop down. So that's why on the Canadian dollar currently, guys, as you can see that oversold hasn't disappeared yet and still stands here. This level has become weaker because market has shown really strong penetration at this level, but still the upward retracement is still possible probably, but right now we can't rely on the bread and butter anymore because it hasn't reached the target. So that's why if even some retracement up will happen, that probably will happen by some other pattern. So, and we need to wait a bit more to see what really will happen. So also we can't exclude that market really could continue to move lower because on the weekly chart we have the strong bearish pattern. So currently, guys, Canadian dollar stands in some kind of the indecision in the short-term perspective. So although we have the bearish context, as we said in the weekly research, on the weekly chart, in the short-term perspective on the daily chart, as you can see, market still stands at the support and still stands at the result. That's why we can't totally ignore that the chance to the upside action really could happen. So retracement could happen, but probably it will, if it will happen, it will take place not by the bread and butter already. This will be maybe some other pattern will form here. I do not know which one. this will be formed, maybe some kind of the double bottom here or something of that sort. Right now it's difficult to say. So we will continue to monitor the situation because we have the significant trading plans in relation to the Canadian dollar on the monthly chart, on the weekly chart. This is just an episode in our trading. So we have expected some kind of the retracement up, then ABCD move down with our weekly setup. But as you can see, the upward retracement has stumbled, so it hasn't developed fast. But we will continue to watch what will happen. Right now on the Australian dollar. On Australian dollar, guys, also is very interesting setup is forming, and it's mostly based on the trading patterns that we have discussed in the December. If you remember, initially we have traded this, I will contract the chart, you will see we have traded this bearish dynamic pressure, and here was our trigger moment when we said that as market hasn't reached the opposite border of this consolidation, I will show you on the daily chart a bit later, then we should be ready for the drop lower. That really has happened. Market has dropped lower and taken out of these lows. So minimum target of the bearish dynamic pressure has been completed. At the same time, as you can see, we have also the butterfly pattern here is forming, but market hasn't quite reached its target and has formed this bullish engulfing pattern on the weekly chart. That's why current situation is very interesting, because if bullish setup will fail, then we could expect significant downward continuation. That's important, especially the if of the Federal Reserve statement that we will get today. Now on the daily chart, guys, this is the pattern that we have traded, and here you could recognize another butterfly. So this butterfly also hasn't quite reached the target, 1618. Market has stopped here because market has completed this A, B, C top D pattern. And I have marked this consolidation with the red circle because you could recognize reverse head and shoulders pattern. The trickiness moment of this pattern is that, take a look, the neckline of this pattern coincides with these lows. And you could draw this consolidation not as the triangle, this has been broken, right? We have discussed this, maybe you remember how we trade this pattern, but as the sideways consolidation. In this case, this will take the special meaning, this low, right? Something on that sort. Well, and why this pattern is valuable for us? Because if market will return right back up above these lows, this really could lead to the further upward continuation. But if head and shoulders will fail and market will drop below these lows, below the shoulder, you will get the clear sign that market will drop lower, taking out of these lows, and probably will complete as this butterfly, as this one butterfly that we have on the weekly chart. That's why this is a very interesting pattern. So on the forward time frame chart, you could see the details. This is head and shoulders pattern. Now it particularly staying at the neckline. Also it coincides with the 3.8 resistance. Now we should watch what will happen. So minimum target of this ABCD pattern, of this head and shoulders is the ABC bottom D, will give us the agreement with the 71.35 area. This market will continue to move higher. So the completion point of the head and shoulders. But I suggest, guys, if market really will fall to the upside and break this area, this could even lead not just ABCD but also 1618 extension and classical target of the head and shoulders pattern, right from the neck to the bottom of the head. I suggest that it will break out. This will be approximately 7250 area. Because breaking through this neckline will simultaneously will mean that market will return back inside of this consolidation and could lead to really significant action to the upside. That's why it's very interesting. At the same time, at the if of the Federal Reserve statement, market could fail, for example, depending on the comments that we will get. If it will fail at the neckline and drop below it, well, guys, this will give us strong bearish signal. The trading to the downside will take it out of these lows and even continue move lower probably. So that's why this current setup on Australian dollar is very interesting, because we mostly have the clear pattern that's right now is forming here. In fact, it already has been formed. The market already stands at a very important point. That is neckline. So depending on your view on the current situation, the upward action mostly has happened on the better inflation data in Australia compared to the expectations of the market. So you could trying to take the position according to your view on the current situation. So if you're have the bearish view on Australian dollar, it's better to you when the market will drop below these lows. And after that, think about the taking short. If you have the bullish view, well, in this case, you could try, for example, take the long position based on this most recent swing with the stops below this area. Or wait for some retracement maybe here if it will happen, but I'm not sure that really will happen because the shoulder already has been formed. So right now market will start to challenge the neckline. So that's our current view on Australian dollar. Let's see what we will get.